Good afternoon, everyone. Welcome to the EOcafe, where the EO community meet. It's been a few weeks because we had a pause for the holiday in May, but we're glad to be back again with an interesting subject, looking at a special market opportunity. I'm very pleased to welcome Laurent Sabatier. EOcafe, just a reminder of the rules. I think everyone knows them by now, but I'll repeat anyway. So please, if you're not speaking, leave your microphones on mute, but you're very welcome to put your cameras on. We encourage it even so that people can see. It gives a more friendly atmosphere. We'll take questions, but please, if you put the questions in the chat so that we know they're coming, and then at the appropriate time, I'll turn to you to ask the question, so you join in the conversation. And please introduce yourself when you do speak, and indeed the webinar will be recorded. So I've got my tea with me. It's been the afternoon. I drink tea. I hope you all have your coffee. So this week, as I say, we've got an interesting subject. Welcome Laurent Sabatier from Skyline Partners. Skyline is a London-based insurance company, a startup, I think 3 years old, but Laurent will correct me if I'm wrong on that. They talk about themselves as being in insure tech, so using data and technology for insurance. And indeed, looking at a little bit of research, they're specializing in index-based insurance, which is what Laurent will talk about. And this is an idea that's been around for some time, but with new access to data, new technology making data very much available. It's bringing this into the foreground, and Skyline as a startup is looking to specialize in that business. Now, I don't know anything really about index-based insurance apart from the short talk I had with Laurent in preparing for today. So the first thing, Laurent, very much welcome to our EOcafe. Thank you very much for joining us today. Can you explain to us what index-based insurance is? And maybe say a few words about Skyline, of course.
Of course. No, thank you, Jeff. Thank you, Jeff, for having me, and very nice to be here. Hello, everyone. So I'm Laurent Sabatier, co-founder and director of Skyline Partners. So Skyline Partners is, as you said, Jeff, a British insurtech. We specialize in index insurance. So we are quite a new startup. We are here actually since 2017, late 2017. And we are, private equity funded, and we are solely focusing on index insurance. So index insurance is actually a new type of insurance. It pays a priori using an index, which is measuring the risk which is covered using data. And that index is proxying the losses which are suffered by the clients and which need to be protected by the insurance contract. And instead of waiting for the losses to be observed and experienced more even, and identified by the insurers, which can take time, like in a traditional way, with index insurance, using that index, you can be paid even before the losses have been experienced, which save time, and make also the cover much more transparent. And it also allows to protect risks which were very difficult to protect in a traditional way. And I will explain this later on. So at Skyline, we specialize in that. We only underwrite and design index insurance. We see this as a growing opportunity with the increase in availability in data. Of course, with the topic today and remote sensing company, it's obvious even to link it to index insurance, and I will explain why we are particularly interested in satellite applications and remote sensing. But the increase and the growth in availability in data made risks much more observable, measurable, and therefore insurable via an index insurance contract. So at Skyline, we have designed already some innovative protections for natural disasters, which is the main application for now of parametric insurance, index insurance. But we've also been working in agriculture, which is also the second sector, which is really using index insurance. We have also some products in marine applications, We also work in renewable energy construction, and we even launched a product in the US for the cost of violence. So you can see index insurance can be applied in many sectors, many classes of business, and can protect literally any risks. And it's a new way of transferring risks using data, and as I think, like a very big potential for remote sensing companies.
So can you give us an example of how it works? Because you talk about risks. As I understand, it's not about the traditional, there's an insurance, then you go out and you evaluate the risk, the event and the damage that's been caused, and come up with a figure that you then negotiate. It's more about fixing things in advance.
Indeed, it's exactly this. It's very much an a priori concept as opposed to an a posteriori, which is really like the way traditional insurance indemnifies. Yeah. So what happens with an index insurance, or it can be called also parametric insurance, but I will try also to distinguish both, and you will see there are some distinctions I think to be made. So an index insurance really works using data. So ultimately, an insurance contract aims at transferring risk. So you buy an insurance contract because you want to protect against hurricanes, you want to protect against car theft, you want to protect yourself against flood, or climatic risks affecting your crop, etc., etc. So the thing is that most of these policies are indemnifying the losses after the event, once they are like kind of crystallized and measurable. But measurable in quantifiable terms, I would say, like indemnifiable, adjustable. So insurance companies in general send after an event an adjuster to estimate the losses that you would have suffered. So they will quantify the damages to your house, the damages to your business, which can be physical or business interruption related, or loss of opportunities. And that process can be very lengthy. It can take months in certain cases to be paid, and even in certain cases it can take years. And parametric insurance transfers, if you want, this kind of lengthy indemnification process a priori, instead of waiting for the event to happen and all this process to occur in order to pay claim. You only focus on conditions to trigger a payout. And these conditions are designed to align with the risks that the customer will be interested to protect against. So in the event of a hurricane, the hurricane will be, for instance, like where has the hurricane hit? Is this far from my risk, from my location? If I'm not hotel owner, for instance, in Caribbean, and I want to protect against the physical damages, but more importantly against the loss of attractivity, the business interruption resulting from an airport closure, or infrastructure being affected, or even the opportunity loss if a hurricane hits the region and you lose like lots of customers. All of this is not protected by a traditional insurance. With an index insurance, you focus solely on the cause of the economic loss, on the period, on the hurricane. So you can structure an index and a payout mechanism, which is defined a priori. All the formulas are transparent. All the conditions are transparent and written down on the contract. And you can be paid as soon as these conditions are met. And as a result, you can also cover more things. Because you see, I alluded to risks which are not even protected in a traditional manner. And index insurance, by doing that, allows to broaden the scope of coverage. And therefore to extend actually the level of protection for certain risks, which is a very important matter. And I will try to explain it a little bit more afterwards.
Yes, okay. You talked about agriculture as well as sort of storm risk or hotels or infrastructure. If I'm a farmer with I don't know, a crop of vines, a vineyard, which is we've seen the images recently of the cold weather freezing the buds and leading to large losses for the fruit growing industry more broadly, not just wine growing. So is there an advantage in that sort of risk? Is there an advantage to the farmer in index-based? You talk about getting a faster payout. Does that also mean a reduced payout?
So you can definitely link to this experience in France, for instance. Like in the last weeks, really, the frost has been dramatic for the vineyards and all the wine industry, really, and also all the fruits, particularly in south of France, and lots of farms actually and vineyards have lost, like most of their productions. And indeed, lots of farmers and growers have complained about the fact that they weren't insured because they didn't take the insurance because like the trigger of the insurance product that they had were structured in a way that they weren't going to trigger even for events like this. So they were perceiving, if you want, the existing insurance as too expensive or not really appropriate. So what's interesting in index insurance is that you can surgically remove all the noise and focus only on what you're really interested in. So if, for instance, like the tail, which is the most dramatically impacting your production, is frost. You can focus on frost, and you can focus on frost during the late seasons, maybe in spring. So you can almost insure yourself only against the risks which is happening only for a few weeks and only for the risk, and therefore reduce your amount of insurance for only what you need. So as a result, you can be economically making some savings by focusing on what really matters for you. And the second thing is also very, very important, is that index insurance could potentially allow you to get protected even before the event happens. Because lots of these risks, I would not say they are like highly predictable, but you could predict, like a frost a few hours, so days, like earlier than when it happens or occurs. And you could potentially structure some products on an index insurance basis, which would protect the farming industry ahead of the event and say, look, instead of waiting for this to happen and hoping for the best, look at what all the farmers did. They put some candles in the fields. They were all night, trying to save their crop. They were protecting it as much as they could, and all of this has a cost. All of this could be anticipated and structured in an index insurance because we could potentially foresee the frost coming and say, look, we are going to give you a cash relief of, I don't know, a lump sum to pay for all this operational cost. The cost of putting people in the field, setting up all the candles, or other risk mitigation measures. And all these things will be very, very interesting to develop. And actually, we are looking at this at the moment. So anticipating, having some ex-ante products, which are complement. They are not here to replace. They are here to complement, to provide additional risk transfer structures.
Okay, I mean, some vineyard owners were even flying helicopters to try and keep the air moving. So really spending a lot of money in protecting their crops. So they would have a better judge of that. They would have a better certainty of payout from you.
So it's kind of more transparent, and the terms are certain. So it's index insurance by design. You almost use a formula to indemnify the claim. So once you sign the policy and you pay the premium, if these conditions are met, you can't challenge the payout. The insurer will be indemnifying at the level that you signed upfront. And that's one of the benefits. It can be also seen as a drawback, but it's for me a benefit because certainty in cover is, in my opinion, of the highest value at the moment. When you see actually lots of challenges which happen, and particularly, like in litigious, like situations, you want to have certainty in cover. You want to know what you will get and what you pay for.
Sure, that's a big advantage. So, I mean, I'd like to explore a little bit more on the industry, but maybe we'll come back to that because I think most of the people here are interested in the sort of geospatial aspects and where satellites can help. So, tell us a little bit about your view there.
Yeah, so I think geospatial data is almost integral part of index insurance. By design, index insurance, it's an index. So index. You use data to construct the index, and most of this index is geospatial in space and time, and it's here to measure risks. So by design, index insurance has to get data. It's built with data in mind. So it has to use some data. And you know, as I said earlier, with the growing availability of data, you know, the rise in of course, you know, like public data from large institutions providing, you know, like greedy data for climatic data, for instance, you know, NASA, ECMWF, you know, like all the Sentinel programs, Copernicus, Modis, all these things have definitely provided, you know, lots of data to build new indexes. And I'm sure lots of companies, you know, like who are listening today have constructed some indexes to predict, forecast, provide services, you know, to certain industries, renewable energy, agriculture, marine, or others. And we do the same, but we do it in a risk transfer manner. So we use indexes to transfer risk. So that index will measure risk. And for instance, we would use, you know, geospatial data in agriculture. So we will construct an index so we will work with, of course, experts in this, because we are experts in index insurance and in insurance. We are not experts in yield modeling, but we will work with some experts in agriculture, for instance, who have some you know, sophisticated yield models using some physical parameters, the soil, the type of soil, you know, the type of plant, the space between the plant, all these kind of things, as well as climatic parameters. So solar radiation, wind, temperature, relative humidity, soil moisture, etc., etc. And by building this, you can create an index. And that index could be a yield proxy model. It could be an estimate of loss resulting from frost. It could be a damage caused by heat stress, etc., etc. It could be a requirement in irrigation as a result of drought or you know, like lack of rain and lack of water in the soil, really. And all of this can be built as an index. And all of this comes from satellite-derived data.
Would it cover things like technical failures? You talk about irrigation. If there was a technical failure in you know, a pipe cracked or something like that, is that covered?
It's interesting. So actually, we are not really covering these things at the moment because we can't measure them. But what if we could measure it? You know, you got some drones maybe, or some even satellite imagery who could literally identify a pipe bursting. If you can identify that, yes, why not? And if on top of that you can identify it automatically and systematically, yes, we can build an index. If it's not systematic and automatic, why would you build an index? A traditional insurance would work as good. I think the interesting element of index insurance is the systematic and automatic aspect, and therefore its scalability. So if you've got availability of data and an algorithm to identify this risk and measure it anywhere in the world, just depending on a few parameters, you can build an index insurance. If it's cumbersome and it has to be done almost manually, then you go back in a traditional manner. You see, that's kind of how I would design it. And I can see, you know, the rise of you know, drones, satellites, so micro satellites, high altitude satellites, you know, like, and all the various technologies which are really improving ways of measuring risks. We are building new indexes really every day. I can see new indexes coming in, measuring new risks. You could even not think of what risks, you know, we can measure with data, which is fascinating. And we can predict. You can protect ahead, and you can measure the losses correlated with these indexes.
I think we could have quite a long discussion around that. We also have a big discussion about drones and how drones fit with satellites, and you know, the advantages, disadvantages of both. We talked about burst pipelines. Certainly, there are ways that can be measured using space data, blockages, too much water, too little water in local regions. You talked earlier about car theft, but I guess that was only just as an example. It wasn't the sort of thing that you would cover through.
It was more traditional insurance, I would say, this
right,
one, you know,
okay.
Because that's kind of what people buy insurance for, you know, like a personal lines. You know, you will get your car insurance, and you will be worried about your car theft or your car being damaged. That is still a little bit difficult to insure via an index insurance. We are thinking about ways, but it's not there yet. It's not there yet. I'm sure there would be some indexes at one point which will be looking at this kind of things.
Yeah, we've seen some very high resolution data just now becoming available from Airbus, but even so, I'm not sure that's going to be at the right time or the right availability for
yes, and there are
detecting car theft.
Complexities. There are other complexities, like in insurance, to qualify as an insurance, you need to make sure that there are some boxes ticked, and
sure.
And it's a little bit complicated when you go into this type of risks, but it's I would not say it's impossible, because we have been insuring some risks on an index insurance basis which are quite counterintuitive. You would think, is this insurable? And yes, it is. So I'm sure at one point we will find solutions for it.
Okay. I mean, I'm intrigued. Okay. So there is high resolution data, there's free data from Copernicus, there's commercial data, optical radar. Do you have any views on what sort of EO data and EO services you're looking for?
Yeah, so I think like the in terms of really differentiator for these indexes, I mean, the critical piece is the granularity. It's getting as granular as possible, to be as close as possible to what the client will experience. And I think this is really the critical piece. And I can see already some companies, lots of companies actually focusing on this, like trying to downscale public available data, downscale it by adding some new set of data. They launch their own constellation of satellites. They use drones. They use some like some smartphone data. They use some car data sometimes. And all of this, in the idea of making the data more granular, more specific to the customer. And I think this is a very, very interesting trend, because that links to what I just said. Like the data availability and the granularity of the data will link it to the growth of index insurance. Because at the moment, one critique, I would say, and one drawback of index insurance is linked to the data availability and its granularity. If you insure, like a claim, so a risk using data which is 20 kilometer resolution, and you insure a parcel which is just a few hundred meters, you got what we call a basis risk, and that basis risk is still perceived as an issue. Even if I kind of think that it's not really aiming at protecting the same type of risks, and therefore I don't really see that as a negative. From a customer perspective, it's just counterintuitive. It's common sense, if you want. Like when you get insured using an index which is not exactly what you perceive, it's still a negative effect. And I can see the direction of travel, like of the industry, like in the remote sensing, Earth observations, and availability and producer of data, really, is going in the same direction as what we are requiring, is getting data more granular.
Data is becoming ubiquitous, but I mean, granularity, you've talked about different types of data. You've talked about spatial resolution, but I mean, one of the key factors is also the timeliness, the availability of on time. And with more and more data sources, we also talk about the assurance, the sustainability, whereas maybe 10 years ago, certainly 20 years ago, you could have data, but you couldn't be sure that it would be available, in 6 months' time. Yes. Whereas now, with the large variety of data and the large number of suppliers, you can be sure of continuity. So you can build business models on the availability of data more confidently.
Yes, you're absolutely right. Like the confidence in data has grown. Like the business continuity, because of the competition aspect, and because of also effort from large institutions which are publicly funded, have made this possible, because it's as you said, it's available across time. That NASA and ECMWF are not going to disappear overnight, and that I think is definitely going to sustain and provide certainty for this business to grow. And you got also availability across time, but across history as well. And that is critical for insurance, because we need to have historical, even if in many aspects, history is not always representative of the risk itself from an insurance perspective and from an underwriting perspective. you need to have a view of the performance of the risk over time. It's the nature of what we do. We need to underwrite. We need to know what was the profitability and the performance of the risks that we underwrite over time. And for that, you need to have statistics over an historical time series. And lots of this data is now available, like for quite a long time. So ECMWF has made all their climatic synthetic greedy data available since 1950s. You can see lots of satellite data available since the early 2000s. Even if it's not the same granularity and the same resolution, it's still like a great time series. And all of that has improved, I think, like the understanding and the willingness of risk carriers to underwrite using this data. And I really think that this is going to improve over time. There is still probably a little bit of difficulties, to marry the forecasting aspect and the element of using past data to predict the future. Lots of companies are spending lots of effort on this. I think there is still, like a gap between underwriting risk based on past data and based on prediction. But like I'm sure the gap will be covered very soon, and you will see lots of carriers underwriting using prediction data.
We've got some good questions coming in, but just before turning to there, Skyline is a startup. Index-based insurance has been around as an idea for some time, but now you're turning it into some reality. Is it a large movement? Are there many companies? Do you have much competition? Are you way out ahead of the field in this respect?
It's a growing market. There are lots of efforts actually being made in that direction. We are not the only ones, unfortunately, because we need more. We need more, to have actually people actually to evangelize index insurance. We need more and more. So there are a few startups, like doing what we do. There are like lots of incumbents. All the large insurance companies, AXA, Allianz, all the large reinsurance companies, Munich Re, Hannover Re, Swiss Re have very large parametric units on the agriculture side mainly, but also on other risks, so natural catastrophes and other risks. And you can see lots of startups evolving into this. So some coming from the data side, bringing an index, so very niche, like a wildfire prediction company, estimating scars on forestry. Another maybe looking at oceanography and potentially oil spill in the ocean, predicting this. Others, looking at renewable energy, and you will have, these companies bringing this expertise, and we can see that. And we at Skyline, we like to work and partner with this type of companies who have an expertise in this niche, and we help them to transfer some of their expertise into another value proposition and create an index insurance opportunity. And that's very much what we're about. So we create, like this kind of partnerships with expert providers who don't even know that they could actually use this in an index insurance way, and we help them to transform it. And we build, the bridge between the insurance market and their expertise.
You have a lot of guys listening to who want to understand more about that in a minute. But let me turn to questions. Roman Shinkarenko is going back to frost insurance. In fact, there were a couple of questions about frost insurance. Roman. Roman, do you want to come in? Yeah.
Yes. Hi.
Hi, Roman. How are you doing?
Hi. Good. So have a look. You talked about the frost index insurance. So with my experience, I know that frost is a very tricky risk to insure through the indices. And it depends on the data that you use for structuring the cover. So do you use the ground-based weather station data or satellite data or reanalyzed data? Because with any type of this data, there is a significant basis risk, and how you manage this basis risk.
Of course. So it's always, like the same question really, like what type of data is used to produce the index. So we tend to prefer using some gridded synthetic data. So we analyze this data because of the large scalability and availability of it, like over a large scope. And it depends really on the application. If it is, like a large cooperative or insurers, like willing to protect a portfolio, and it's an aggregation, portfolio view. In that case, you don't really need the granularity. If you want to look at protection of a parcel and an individual farmer, then it's a different question. So depending on the use case and who we have, in front and what we are trying to achieve, we will have different applications and different, like kind of decisions made. But we tend to prefer gridded data. I think we think it's kind of more future-proof than weather stations, which requires, like a physical device on the ground. And creates also some issues on their own. And for frost, temperature actually is very, very well predicted now. Like lots of gridded data and even forecasted data have correlation and prediction here, like very, very impressive. And it tends to be used. And as I said, the aim is not to replace like a traditional indemnification process, is to complement it. So it's to provide, cash relief. If you know that a zone has been heavily impacted and that you predict, like damages of 70% of the production because of their phenological stage. So the timing of the frost compared to the timing of the plant growth. And we can create, some maps of frost damage, and we've got, some partners who are experts in this. You can create some index insurance products, which will provide an element of indemnification. It's not covering the wall. It's covering for the short-term liquidity. And it can also be used to cover the increase in operational cost. Not only the damages caused, but also the increase in operational cost, because lots of these mitigation techniques, putting helicopters, like spraying some water, having sprinklers, putting some candles in the field, even employing task force. All of this has a significant increase in operational cost, and the margin are impacted. And I think this is where index insurance has a role to play, is smoothing this kind of increase in operational cost.
Maybe another question, just very quick one. What resolution of data do you use? Because with our experience, if we go below higher than 10 to 10 kilometers, we experience a lot of digital noise, data noise, and this actually increases basis risk. What's your experience with this problem?
Yeah, so this is actually where, like lots of companies, I think who are actually joining today have a great role to play. So we are actually seeing, like increase in resolution of data. So now we can see actually data down to 4 kilometers, 10 kilometers, definitely under 10 kilometers. Of course, in markets where availability of data is possible and downscaling is possible. And you can see lots of companies investing in sending their own constellation of satellites, or using, as I said, some smartphone data or even some car data or plane data or any type of data they can gather. They send some drones to improve, like the resolution. And in markets like in European markets, US markets, and others, you can see actually resolutions which is very good, which is like in a few kilometers resolution, which helps to reduce that basis risk significantly.
Okay, thank you.
Okay. Question from Antonio Gilbone about who is the buyer of the index insurance. Antonio?
Yeah. Hi there. I was curious to see how you structured this market, because I'm not an expert in the insurance business, but I know that for every seller of risk, there's a buyer. And as this is pretty innovative, I was curious to know who buys this risk and how does it buy it? So which kind of securities are you using to transfer the risk? And just as a little disclaimer, I used to work in benchmarks before, and I'm a little bit familiar with the EU benchmarks regulation. So yeah, that's it. Thank you.
Thank you, Antonio. Very nice meeting you, and very good question indeed. Actually, I wanted to mention this because this is one of the topic today. Is in what sense is this a business opportunity for remote sensing companies? And I will try to allude to it actually for this question. So first of all, the customers are like the direct like companies who are like facing the risk. Obviously, like companies who are facing the risk can be the potential buyer of this service. So we can see, like farmers. We are launching a product in France literally this week for dairy industry, protecting against heat stress. And here, actually, of course, the ultimate beneficiary is the farmer. And you would expect, like the dairy farmer to be the buyer of the product. But actually, the buyer of the insurance product is not the dairy industry, is a supplier to the dairy industry. And the supplier of service to the dairy farmers is buying insurance and provides the benefit of the insurance as a service to their customers. And that's exactly what we are interested to work on with the remote sensing companies. Because here you have the traditional way where you want to target all the customers in a B2B2C. You will be getting access to all the farmers in the world and trying to sell to them. But this is very difficult. It's costly. And sometimes very complicated to explain also to sell insurance. And also this basis risk can be an issue. So what we see actually growing very much in index insurance, and we are at Skyline specialized in this. We built a platform to automate, like the pricing, the claim calculation, and we can embed that, within very easily in a digital solution, and therefore sell it at scale. We can work with a company which sells already to a large customer base. So that customer base could be, I don't know, dairy farmers in the US, or could be cherry farmers in Chile, or could be anything, any type of population impacted by that. And this population, this customer base buys already a service. They buy software, they buy prediction services, they buy data analytics, they buy forecast. What we do is we say to the forecasting company, so the supplier of services, why don't you embed within your services an index insurance solution? And you differentiate yourself compared to your competitors. You increase your services, so you increase your cost as well. So your service is increased in price, so you get more revenue. And the customer gets more value because on top of prediction services, on top of a software, on top of a seed, on top of a feed for their industry, they will receive a warranty product that will indemnify them if some conditions are met. In the dairy industry case, we are indemnifying the farmers when the cows are suffering heat stress, produce less milk. It costs more money because they have to feed the cow, they have to cool the cow, and they lose some milk production. But it's not indemnifying the farmer directly. We indemnify the supplier of services, which is promising to the farmer that the farmer is going to receive the warranty when these conditions are met. And by doing that, you create new revenue stream. You improve your service offering. You differentiate yourself from the competition, other competitors who are just providing the same services. And you tie yourself more in with your customers because the customers will want you to keep your services because they are even more protected. And that's exactly how we want to sell index insurance. You see, it's finding this kind of pivotal partnerships who have access to a large customer base, have access to a service, and we help to embed index insurance within that suite of services.
Thank you so much. Just
can I?
Very short follow-up. How does it differ from an option in financial securities? Thank you. And that's the last one. Thank you.
Yes, it is a very good question, Antonio. And actually, in many aspects, it shares lots of characteristics. The pricing, the index, the terminology, the carriers will be writing the risk. In many aspects, it shares lots of synergies. But it's not a security. It's not a derivative. It's an insurance contract. It's written as an insurance contract. You can't buy an insurance contract if you don't have an insurable interest. You can't buy a derivative or make a bet if you don't even have any insurable interest. To have an insurance contract, you have to have an insurable interest, and it has to qualify as an insurance contract within the jurisdiction of the localities. And that's really what differentiates, like derivatives from insurance, is that an insurance contract, you have to tick more boxes. But in many aspects, the structuring, the index behind, the pricing, some of the risk areas, it shares lots of things.
I guess you could imagine some sort of paired products between options and insurance as well. Maybe there's something to think about there.
It is. I mean, like all the weather derivatives, we call parametric insurance, but in the end, it's a weather derivative. The only thing that differs is that if it's sold as a weather insurance, you have to tick more boxes. So you have to qualify as an insurance. So the buyer of the insurance has to have an insurable interest. They have to own the field, which is suffering the frost.
Sure.
You see these kind of things.
Okay. Emmanuel Mondon has at least 3 questions that I've seen in the chat. I guess the one about the data from farmers has been answered, but you make a point about Gaia. So you've got questions on the supply side and on the demand side. Emmanuel.
Good afternoon. Thanks, Jeff, for selecting my question. One after the other. EOcafe. Laurent, your business is very highly data intensive. So 2 questions. Are you aware of Gaia-X, which is providing a federation of data infrastructure across Europe? And the second one, Gaia-X is developing a number of data spaces. That's the Gaia-X jargon. Let's call it ecosystem per industry. And among those data spaces, you have agriculture data space, you have finance and insurance data space. So are you already involved in one or another of those data spaces?
So look, Emmanuel, I'm not involved, and actually I would love to hear more about it. So please, maybe we can chat after the event, and I would love to hear more about this. So any initiatives around data which can give us some information or access to people involved in structuring data, processing data, creating new indexes. That's music to my ear, and I'm very interested in hearing about it.
Great, happy to support. Jeff, the next EOcafe after EEA should be around Gaia-X.
We're full until the end of the year, Emmanuel. But, we'll see what we can do. But I mean, we're always after subjects, so I do welcome to everybody. If you've got particular subjects you want us to deal with, then please let us know.
I think Gaia-X is a super interesting initiative across Europe for all of us. Whatever business we are addressing,
we'll fit it in.
Then, I asked a number of questions. I even don't remember it. You were mentioning that the agriculture one was answered. I'm not sure. I was asking to Laurent if you're interested in data coming from farmers themselves, assuming that they could provide it in systematic and automatic ways, as you.
So Emmanuel, absolutely. I think the end goal is to have some data to verify the validity of the index. It's almost having a positive feedback loop in the creation of the index, because the idea of index insurance is to upfront most of the work before the risk happens, so that when the risk occurs, all the work is done and you get paid. You don't worry about anything. If you can improve that process upfront by gathering more data, experience data, losses which have been suffered, and data collected really on the ground by the farmers themselves who have perceived the risk, that's exactly what we need. So for instance, we are launching a product in France on the dairy industry. We are going to collect data with farmers, and one of the activities to validate the index, to improve the index over time. And if you can create that feedback loop naturally, it's a perfect play, really, because you know that over time, your index and the risk being protected is going to improve, and the basis risk is going to reduce.
Okay.
So you get more buy-in from the customer as well, because the customer knows that their data is being used.
We just now about data continuity, and I touched on high resolution data. So there's a question from Theo Kome, which goes around that subject. Theo.
Thank you. I have,
Hello, Theo.
sorry. Yes, sorry. Hi, nice to meet you. I had a question regarding those, you know, Sentinel-1 data, for example, like those radar data that have a very short historic of data. And my question was more from the underwriting perspective.
Yes.
Like, how do you, like, would there be a possibility to use such data with short historic from an underwriting perspective directly? And if not, because most of the time it's not the case, do you see possibility to use, for example, a proxy of such data? Like you try to design a machine learning model, for example, to model this data in the past, and you use this proxy to underwrite your product. Do you see some synergies here?
Theo, absolutely. And actually, we see these problems all the time because lots of data are emerging very recently. So Sentinel-1, Sentinel-2 have just a few years experience, really. So you struggle to look at it from a traditional underwriting perspective, where you have to price and get, as I said, you know, a cycle of performance in order to put a price on it. Lots of classical underwriters would struggle with this. The thing is, lots of products are being underwritten without even any data. So I would not really put, you know, like a break on innovation of products because of lack of availability in history, because there are always ways of creating proxy and pricing models to replicate or proxy the way the data is going to be projected. If you can have a full alignment between your risk models and pricing and the way the claims will be settled, it's a perfect world. And that is exactly what is being done when you use synthetic reanalysis data from ERA2, you know, ECNWF, or you got, you know, 50, 60 years of data, 40 years of data. If you use satellite data, by nature, you know that you will have very limited history. And as you said, there are like ways, techniques to create, you know, like a pricing methodology and underwriting methodology to make alignment between the two. And then it's finding the carriers, you know, who have the appetite for it. And some are a little bit more reluctant because of this kind of, you know, like discontinuities. But I'm very, very pro exactly what you said, because I think, you know, otherwise you don't do anything.
Just to complement, did you tested such ways like already? Like, did you have a pilot project?
So we had some, so not with this particular, you know, like Sentinel-1 or Sentinel-2, but there are like some products here which have been launched where we had very limited history, or, you know, we had history, but, you know, like the history wasn't really consistent across time, but we knew that the new model was consistent afterwards, and we found ways to price it. And, you know, in all fairness, lots of insurance products are like this. You know, when you launch a product in the market and it's a new product, you don't have any loss history for it. So you have to come up with a rating methodology. And that's the nature of pricing. So index insurance is not really different to that. It's just, you know, bringing the different mindset. And the problem is that sometimes index insurance is perceived as you underwrite the data. And this is the case, you underwrite the data because you pay out driven by a formula applied to an index, which is constructed on the data. So the underlying is that you underwrite the data. And if the data is inconsistent across time, is difficult to monitor because the model can change during the year, it can be a little bit tricky. So that's where we see some difficulties, you know, and we try to overcome that by maybe mixing data together, you know, like creating business continuity, as Jeff mentioned. But it's definitely one aspect of the difficulties that we encounter when we underwrite.
Okay, thank you.
Okay, I was going to ask you a question about your view on artificial intelligence, but Anthony Graveline has put a question around that subject. So Anthony, please maybe you can talk about that.
Yeah, thanks a lot. Hi, Laurent. Nice to meet you. Very interesting. We specialize in deep learning applied to Earth observation, you know, satellite imagery in optical and radar. Currently, we are developing a platform which aims to detect and monitor illegal landfills for the public sector. So it's a little bit complicated because we don't have data set to train the supervised model. So we develop new technology, and I'm looking for new use cases each time. So I'm interested to know what kind of information you should be happy to acquire with deep learning applied on raw data, optical and radar, for instance, and to integrate in the process the index insurance. I don't know how your process is digitized, but if we can infer information and then bring it to the index insurance, I don't know how to apply it.
It's a very, very interesting point. Hi, Anthony. Nice meeting you. Yeah, I really think there are lots of interesting use cases for insurance here. So deep learning applied to satellite imagery, like an optical radar imageries are very, very interesting. You can see lots, in the defense sector, but I really think that the insurance sector would be very interested. Index insurance, I think, would be very, very, very good here because technically your deep learning algorithm is an index. You take pure data, you process it, and you get intelligence out of it, and you say yes, there has been a illegal landing in that sector. So you could define that as an index, like across space, time, and type of activity, which is illegal landing. And you could potentially structure an insurance product if someone was suffering a loss as a result of the illegal landing. You see, if you have to put some security in place, or people, like they destroy all your land underneath or things like that, you will suffer a loss. You could potentially see an insurance application here. I completely see it.
Thanks.
Dietrich Heinz wants to be more precise on a particular topic. Dietrich.
Hello, everybody. Yeah, it's an interesting issue. You said we should introduce us briefly. I'm working with Sentinel-1. I'm working on developing indices from Sentinel-1 data, and I worked for several years for Allianz Re. And if we look at the concrete case, because I know some concrete cases, they try to sell farmers drought index insurance, and the basis of the data was a weather station. And then, of course, for the farmer, it is always the question, how is the situation at the weather station and how is the situation at my fields? And then, of course, you say, okay, with satellite data, we can now regionalize from the weather station to the fields and look at the fields. But with the satellite data, you, of course, you don't measure the water and you don't measure the yield, but you see maybe the chlorophyll, or you see the fresh biomass. And then from there again, you have then to calculate to say, this was the reduction of the yield. And for the farmers, of course, I mean, everything, it is a lot of money if they have huge fields and the crop and so on. So it is important that there is a certain accuracy. Now, from your model, what you explained, and that I found very interesting, you say you sell to a service provider. And the service provider, of course, he probably can explain to the farmer how the product works, which is maybe important, but still the farmer, I mean, he is the one who is going to buy it, I guess. And so he needs to understand that this product is really the one which helps him to prevent him from a risk. And the other thing, what you mentioned, which is as well interesting, but in case of drought, I wonder, how can the service provider then assist the farmer in case he sees, okay, in the next weeks, we probably will have a drought because he cannot start to drill a borehole. Then at that moment, water, you cannot just carry there, isn't it?
So so hi, Dietrich, very nice to meet you. And yeah, you're absolutely right. I think that there have been lots of emphasis in trying to make it work at a very granular level, using weather stations and trying to explain it, to the ultimate clients. And it's very difficult. It's a hard sell. Insurance is a hard sell in general. Like in all honesty, insurance is a hard sell. So can you imagine selling an index insurance, something which is even more complicated and things. So we don't really think that it is actually how index insurance is going to be sold, really, because it's more a complement, something which is sold alongside something else. And that's exactly what you described with the service providers. And what we see is lots of these kind of risks are perceived not only as traditional insurance indemnification, like, okay, I suffered some damages to my crop. Lots of the losses are also increase in operational costs. How much water did I spend? How much money did I spend on my software to help me irrigating, etc., etc. And these operational costs are not protected. And to a certain extent, it's almost giving an incentive to the customer to buy more if there were some kind of warranty or some commercial discounts offered by the supplier. And it's a way to translate the risk into some commercial offering, some new services, some new values. And we think that actually ultimately index insurance is that. It's a transfer of risk, but done differently. I don't know if I made myself, like clear, because it's quite complex, but you see what I mean? So you transfer the risk and you convert it into a service.
No, that I think is really a point which may work in certain cases, but in some cases maybe it will not persuade the farmer. And
yes.
The farmer is going to buy for it and has to pay for it. So there, I wonder if it works. But if it works, then it's fine. Yes.
It is always the end point. But if the farmer doesn't buy the insurance on its own, but buys an overall service, you see, you get I don't know, an optimization tool, like a decision support tool, which will help you to irrigate, and to do all your risk mitigation measures. And lots of softwares like that, like agri-precision softwares. If on top of that software, you get, some consultancy services and a warranty product, and that warranty product protects you or gives you additional value. I don't know, you get maybe a discount on your software, or you get discounts on your feed, or you get discount on your irrigation system, or things like that. That could be insured via index insurance, because the ultimate risk can be driven by an index insurance. So it's a translation of the risk into a service offered to the farmer. So the farmer will not buy index insurance. They will buy an overall service. And that overall service will have, some warranty element in it.
But it adds quite a lot of complexity to the product, isn't it?
So I just give the example of the product we launched in France. So it's an agri company which has a software sold to dairy farmers, and they've included a warranty for heat stress. And the product includes heat stress. See, warranty. And we do that also for other companies which are buying. So technically, they are translating the cost individually to the farmer. So the farmer will pay maybe a delta 5% more or 10% more what they would pay normally for their existing services, or whatever the company wants to put. And they get, on top of their existing services, they get this warranty. And so the farmer doesn't buy the product because of the warranty, but they might buy the product because they know that they've got more value through that product than going to another competitor who is just selling the same software. Because that software includes also an insurance warranty in it. They will buy that from that company. Do you see what I mean? So it's a differentiator. It's more value offered. And that is also a new revenue stream because the company gets more value from the customers. That's how we see it, you see. And it's an easier sell to the customer because the customer doesn't buy the index insurance based on the weather station on the ground. They buy the service on the whole service.
You also talked about sort of either side of the farmer in the value chain, so the supplier to the farmer and also the consumers of the products, which are more aggregated and maybe have a different dynamic. We should be drawing to a close now. We're just on an hour. Just a very last word, I guess, for those. We've got a lot of interest in the subject and some good feedback. We've got another session on this in Expandio in a few weeks' time, so there'll be the opportunity to talk there. But what should companies be doing? How can they sort of explore this further? Are they in contact with you? Is there a mechanism to do things? What's your advice?
So look, if any of you is interested to have a specific discussion, you know, on the topic you're interested in, please feel free to contact me. So I will pass my details. You know, maybe I don't know if they are already shown somewhere. Maybe I will talk to you, Natasha and Jeff, and if someone like inquires for some more questions or something, please feel free to pass my details. And I will be very happy to organize a specific call and discuss maybe business opportunity. You know, like I really think that remote sensing companies and service providers, you know, will have some interest in this. We are seeing some traction.
I think you might have quite a full inbox, so we'll certainly pass that information on.
Look, I'm here for this, and please feel free. And I would love to have specific conversations with you all if possible. So we'll have to spread them over time, but I would love to discuss this.
Yeah. No, that's great. Thank you very much, Laurent. I mean, it's been really great talking to you. A nice subject, and has generated quite a lot of interest. And you know, we talked about artificial intelligence. We've already done a couple of EOcafes around that subject, and Emmanuel wants us to look at and talk about Gaia. So, you know, things are spinning around these subjects. I mentioned Expand EO, but it's also the Fire Forum in a few weeks' time. So a lot happening, and you know, we'll no doubt stay in touch. And as I said, I think we pass on your email address, you'll get a very full inbox. But hopefully that's a good recompense for your time this afternoon.
It is pleasure. But thank you very much for having me, and very nice talking to you, Jeff, and meeting you all. And please feel free to reach out to me if you want to have a specific chat with.
And as we say, you know, we finish now sort of the structure part of the EOcafe, but everybody's very welcome just to stay on and exchange an even more formal basis. Our next EOcafe will be on the 10th of June. We have a couple of topics, and they're sort of switching between the 10th and the 24th of June, so I can't be precise, but in principle we should have one EOcafe with the EEA, it was mentioned just now, and we should have another second EOcafe on the Cassini program. So but we just don't quite know which order they will be in yet. But the 10th and the 24th of June are definitely the dates. We also have a third subject which is hovering around, but we can't do 3 in the time. Expandio, I've mentioned it. You know, there's the Fire Forum. There'll be discussions around AI. There'll be discussions around insurance as a topic. So please register for that. Come and join us. We're looking to have a large number of attendees. We, like most of you, I can't say how much we regret that it's not a physical meeting. We had really big ambitions for last year, and even more ambitions for this year. We have to be remote, but we still have big ambitions, and it should be a good session with a lot of different interesting topics to be discussed over the couple of days. Is there anything else, Natasha, that I need to deal with? No. Okay, so I can.
Perfect, like always.
Thank you all very much for joining us. Feel free to carry on the discussion now, very informally, and we'll circulate Laurent's email address. So please feel free to get in contact directly with him, and hope to see you all again in 2 weeks' time. Thank you very much.
Thank you, Jeff. Thank you, everyone.
Thank you. Bye.
Bye, Mark.
Bye-bye.
Bye.
Bye.
Bye.